Look at that drop. I think that's 70% since May the 9th, which is about the time it took from the beginning of the drop of the price to the time it took to actually find a base here and find some support. That's about 24 hours. And that's approximately 70% drop. If I had to measure it here, this stock lost 72% up to 76% or 77% loss of value in stock price in less than 24 hours. This is the 30-minute candle chart we have of MGNX. And if we toggle back to a larger time frame, say the weekly chart, which gives a better picture. I'm going to get rid of the legend so you can see the bar chart better. Look at that. If you can get a closer look at that chart there. See where my marker is pointing? That's where it was May the 9th. And then May the 10th, market open, 72%. And the only clue anybody would have had is that when we see price here as of March 19th, you see that the price hit resistance where I drew that white line here, approximate resistance, and it crosses above the wick. I don't know if you can see that. And that's the first sign that this stock is losing momentum and the sellers are taking over. And it's just a great example. And you see now it drops back to the purple line here, which is the 10-day moving average, and the red line is the 20-day moving average. And once it loses the 10-day, we see it consolidates a little bit, tries to regain the 10-day, but now we're making lower lows, excuse me. Now we're making lower lows. So from here to here, it's technically a higher low by the angle, but what I would look at more so, usually you want to look for lower lows to have a thesis that the stock is losing momentum and losing buyer favor or buyer bullishness, which really has to do with confidence in the stock. But to get a better idea of what's going on, look at this price action here up along the 10-day, just surfing up the 10-day moving average, that purple line here, for months, going back to, October 31st of 2023. And then we're surfing all the way up month after month after month after month. Keep in mind this is the weekly chart, so these are weekly candles. One candle represents a full week of trading activity. So you got many, many weeks here that go back to a previous year. And we're surfing the moving average here all the way up until March, and then it hit overhead seller pressure in March, back to the 10-day, and now it's touching the 20-day. When it starts to touch the 20-day, now your risk profile should change. Now you should be looking at either reducing your position or tightening your stop. So either selling off your position as a lesser part of your portfolio, or you should be looking or thinking about tightening up your stops, whether it's a standard stop loss fixed or a trailing stop loss, whatever it is, and protecting yourself from that risk, all that risk energy that we've talked about in my course. And this is the kind of thing where position size and stop loss management come into play. The markets are doing fine right now. Let me adjust this camera here. I just want to explain for a second. You know, the markets are, S&P had a great week, the NASDAQ had a great week. Markets have been doing fine. I've been seeing a lot of more green days than red days. And the reason why I wanted to give that example, I actually showed this stock, MGNX, in the course that I was teaching, Easy Stock Essentials. And the Easy Stock Investing Essentials course has that as an example. When it was doing well, But that was many, many, many months ago. So the point is, I'm trying to post an unedited video just so you guys can get a real world listening in on how I look at these situations and how important it is to grasp some of these concepts. So in a really informal kind of way, I wanted to talk about what this kind of chart can tell us and what we can learn from it, okay? And the real takeaway here is that at any given moment, this is how Mark Douglas teaches the stock market to people. The Mark Douglas is famous for trader psychology and stock market, investing psychology and all that. And what he teaches is that at any given moment, any participant in the stock market has the potential to cause a stock to do anything at all. And that means a stock can go up 80% in a day, down 80% in a day, etc. And that's the approach or the thinking you want to come to the market with. You want to come to the market thinking, okay, any participant can cause anything to happen. And because of that, I should be prepared. And also I should be looking at how stock prices are behaving around the major short to medium term moving averages. And so in this situation where the stock lost 72% of its value in under 24 hours, as of May the 9th, today is the 10th, right? In this kind of situation, the questions you should be asking about your portfolio management is A, how many stocks do I have? B, how tight or loose are my stop losses? And C, how big is my position size in each position? And do I have any positions where, say you have a certain stock where the stock is not performing properly or the way you want it to, like we just showed you here? Losing the 10-day and then immediately losing the 20-day is a very big sign, very big signal from the market saying, hey, something's not going right. And that's when you should start either A, cutting your position like I said, or B, really tightening up those stop losses. And I just feel like so many people could benefit from a better quality of investment education to embrace these really, it's just simple concepts, these are very rudimentary, basic concepts, like, is the stock behaving right? No. Well then let's tighten those stops. Well then let's reduce that position size. Well then let's start fishing for better performers. Let's put it on our red flag list or our soon to be dumped list or whatever. Doing those things is huge for people who are trying to manage a portfolio and want to grow their portfolio and want to grow their account, want to grow their finances. But you do that by paying attention. And I don't mean to stand on a soapbox here. I'm actually sitting on one, not standing on one, but I don't need to give a big preacher speech here. I'm just trying to explain to you with this example, because I had this stock in my portfolio, and I had several $1,000s of it in my portfolio not too long ago, back during the winter, when it was behaving well above those two moving averages. And those are just really historically the best two moving averages, the 10-day and the 20-day. And really, this is probably better than any example that I give in my course. You might be looking to save a few $100 here by just watching this YouTube video, and you can skip my course. It's probably the dumbest thing I could say. But this really is better than the examples I have in my course. However, I do go more in depth in the course, and there's more, detailed, strategic, educational value in the course that you won't get here from a short video. But that's the thing about a situation like this. It's just a perfect example. This example is great because it can show how dramatically quick and how dramatically profound a move can be by any individual stock at any given moment. And if you're paying attention, and that really is the key, if you're paying attention, you might be making smart decisions before something crazy like this happened. And people are overly focused on making a big payday in the stock market, or they're overly focused on, gobbling up all those stock names that they think might get their account to that next level, or get that big profit, payday we're looking for. And I'm not criticizing that. Everybody should be looking to get wealthier using the stock market as a wealth building tool. That's not what I'm not criticizing that at all. What I'm saying is that do that, but achieve the first step first. The steps that I teach in my course on risk and account protection and market signals to look for before stuff like this happens. These are the examples that really will allow you that passageway to having the potential opportunity to build wealth in the stock market. It's the reason why people don't build wealth in the stock market, because too many people are trying to sprint before they crawl, or they're trying to jog before they know how to walk, etc. So I really want to cut the video short. I just wanted to show the big lesson here that we can learn from this stock chart. This is a very informal, non-official video here to just quickly pop a YouTube video onto the internet to give this example, because I didn't realize until about 30 seconds ago before I cracked open my computer and the YouTube camera here. So I was just scrolling, stuff on the news, like there's war going on over here and tragedy going on over there and the Tom Brady roast and blah, blah, blah. And the markets were kind of flat today. So I was like, there's not much going on. And I just said, well, why don't I take a look at my usual watch list? And I saw MGNX pop up, which was a healthcare stock. And that's the one I just showed you. And I was like, holy smokes, 72% drop in 24 hours. What was I doing today? How was I not shorting this stock? And I wish I would have. Don't we all? And so, but to catch something like this before it happens is very difficult, unless you're really paying attention. And I was not paying attention, but you can see the telltale sign here where, and I'm going to give you a second look at it, just to show you. This doesn't even meet my criteria. Oh, I totally missed that. There it is. Sorry. This doesn't even meet my criteria for starting to form a downtrend or nothing, or there's no signal here of a downtrend, right? So this big red candle here is a 72% drop. That's that big red candle. And then the only hint that we get is that we lose the 10-day. Right here we lost it. And then it fights back to try and regain the 10-day. And then we see here it loses the 20-day. It loses the 10-day again. Now drops to the 20-day moving average. Then boom, falls below and then drops 72%. So this would not have been that much of a red flag for me, because this low here before the big dramatic drop is actually a little bit higher than the previous low. So this would have been a toughie one. Very confusing to me if I had to make a decision if I was holding this in my portfolio. I don't think I would have caught it, which is why, like I teach in my course, you really want to figure out your strategy beforehand regarding things like how many stocks you're holding, portfolio size, position size, stop loss management, things of that nature. And then when I say stop loss management, it's very important to notice these kinds of bad behaviors. See, this is a good behavior here. When we're climbing and surfing, like we're just printing money here, surfing the 10-day moving average, right? That's what we want to see. But then when it starts doing this and that, even though that does not fit the criteria for a downtrend, it does fit the criteria for bad behavior. Because the criteria for a downtrend is that this low should be lower than the previous low, right? Lower lows means you're going down and down and down. If it's higher lows, then that means you're going up and up and up. So this wasn't even making lower lows, which is why this is such a tricky one, right? But it did show us bad behavior in the sense that it lost the 10-day and it was flirting with losing the 20-day right here. And when it finally did lose the 20-day is when we got hammered. So if you had a large position in the stock, you're having a very bad weekend this weekend, right? 72% bad weekend. So that's the main theme here, or the main takeaway or lesson, is that, look, all it is you can boil it down to paying attention is number one, and number two, paying attention to what we're seeing here, which is good behavior versus bad behavior. It's not the worst bad behavior in the world, but if you're looking at medium term, then that's pretty darn bad behavior right there, okay? So that's what I'll end that little example on there. I just wanted to give a real world example of an easy way to approach understanding. It's just really an easy way to look at how to approach risk and how to approach protecting your stock positions and your stock portfolio. And that's really what this is all about. It's protecting your assets, protecting your wealth, and really protecting your wealth for the main purpose of being able to survive to that next week or month or whatever, and maintain and keep enough of your money to avoid situations like this, and then be able to pursue gaining and acquiring big profits through stocks and investing or trading or whatever it is that your strategy is. So that's really it for this example and for this YouTube video. This was really an impromptu out of nowhere because the stock made a move like this out of nowhere and really got my attention because of stuff. I haven't seen the stock move that dramatically in a long time. And so that is the lesson there. And I think this might have been better than any example that I'm selling in my course, which shows you what the value of YouTube is. You can just tune in and see what someone's thoughts are on something that maybe you can learn something from it and take away a lot of value from it, I hope. So hey, hit up the comments if you have any thoughts about this, or if there's anything that you think I missed, let me know. And I appreciate you tuning in, and I'll see you in the next one. Thanks.